Hey guys, this is Andrew for TrendSenses.com. So very quickly, I'm a professional trader and I do some videos about technical analysis to show you guys the different techniques that I use to make my trades. But in this video, I want to talk about something that is a bit different, but as much as important as technical analysis. This is risk management. Let's get into it. So risk management to me is, let's call it golden rule number one, is like a set of rules that I want to show you guys that you need to follow if you want to be profitable in the long run. So very quickly, let me tell you a story to show you guys how much this is important. So the kind of best technical trader I know, he's an Italian guy, a bit younger than me. Let's call him Giuseppe for the story. It's not his real name, but I don't want to give his identity, you know. So Giuseppe was, to be honest, a genius. Like he was the kind of guy that could tell you where the market would be, for example, in 2 hours. So he was not always right, of course, but quite often, you know, the probability to know where the market is going to be, for example, in 2 hours is close to zero. And sometimes this guy was giving you the answer very precisely because like his tools, the environment he was working in was very efficient, at least for him. He knew how to associate the different indicators he was using, and he was a beast, you know. Seriously, he you know, all the traders, they were often calling him like, hey Giuseppe, can you tell me for example, where do you see this index or this currency trading, I don't know, tomorrow or whatever. And Giuseppe was just coming and saying, hey guys, like what I see is that most likely this could happen. You have a resistance here, so the market could get rejected and then come back. It usually takes like, I don't know, a few hours, blah blah blah. And it was just impressive. He was helping us really to generate a lot of money. He was very precious, and he knew that he was good. So he was like, all right, why wouldn't I do some PA, which is personal account trading? And so he started to trade PM. So at the beginning, he was trading just a little bit. But actually, he's the kind of guy that was aiming at the moon. You know, he wanted to do something that people would remember. And actually he did, but not for the good reasons. And you're gonna see why. So he started to trade a bit bigger amounts, and then there was this trade that he was like very sure, you know. He was like, all right, I have a lot of support signals at this level, so I know there's going to be a lot of liquidity if the market comes here, so I want to buy a very massive position at this level. And he set up his stop loss and his target with a nice risk reward, so around like 3 or 4, something like this. So very quickly, for those who don't know, the risk reward is how much you can win divided by how much you are ready to lose. It's important to have a risk reward between 3 and 5 to 8. At least this is how I like to have it, but above 3 is very important. So his risk reward was around 3 or 4, whatever. And so he enters his position, the market comes to the level he wanted to buy, he buys a lot. He put a lot of money and it goes well. It rebounds exactly how he predicted it, and he starts to be profitable. And then a few days later, there is an announcement by the Bank of Japan, you know, the BOJ. It was like a few years ago, and it was Kuroda saying like, I don't know, something about quantitative easing, whatever. And the market didn't like it, so it dropped heavily. And I look at the market, I remember where was his stop loss, and then it just rebounds just before his stop loss. It was beautiful, you know. It was perfect, and it was something like -2% with like in 1 hour, and a few hours after it was like +5, so basically up 3 on the day. So I look at him, I say, yo man, you're coming back from the dead. And he's not replying. He looks like a ghost, you know. So I understand something is wrong. And he comes to me, he looks at me and he say, I just lost everything. So I'm like, how is that possible? He says, I don't know. So then he you know, he talks to me about his trade, and And he tells me, yeah, I just got stopped by the broker. So I'm like, how much money you had? And we compute everything. And I'm like, yeah, but this is normal that you got stopped, you know, because you were probably below the maintenance margin. And he was not aware that the maintenance margin was different from zero. So very quickly, you know, you have a lot of margin requirements when you trade through a broker like Interactive Broker or Saxo Bank, which are the two best brokers for me for personal trading, but whatever. And you need to have some amount on some money on your account to keep your position, and this amount of money is not zero. So when you compute your stop loss, you need to keep in mind that before you lose everything, the broker is going to stop your position. And this is what happened to him. And of course, afterwards, what happened? The Nikkei was just like going up every day, and it has reached his target. So his trade was a winner. You know, he would have made a lot of money. He would have been rich very quickly. But instead of that, he lost everything. He lost the bonus he made the year before. He lost the money he actually accumulated on his account by doing his like small good trades. So basically he learned the hard way that you have some margin requirements and that you need not to overinvest. So if we go through Giuseppe's story together, we can kind of identify what mistakes he did, and he did a lot. The number one mistake is that he didn't know about the rules of the instruments he was trading. It was futures, and he didn't know about the margins requirements. So this is very important to know about. So very quickly, the initial margin is the minimum amount you need to have on your account to enter a trade. Then the maintenance margin is the amount below which the broker is going to stop your position, and it's very different from zero. So you guys need to be aware of it, and please go check it out before doing a trade. And then you have the variation margin, which is the money you need to top up to stay in the trade after margin violation. The second mistake he did is that he had too much leverage, or he was overinvested. This comes back to the same thing. So it's very important to calibrate your initial investment in order not to lose everything if things go wrong, you know. So even if like he didn't got stopped by the broker, but just his stop loss, he would have lost almost everything. So, you know, anyways, his trade was too risky, too aggressive. You cannot let this happen. You cannot get wiped out and lose everything just because you were wrong once. You know, trading is not about being always wrong. It's about being more right than wrong. It's about expected gains and probabilities. So, you know, and for example, in banks or hedge funds or any big institutions, I can tell you that the number of people working in the risk management teams is as big as the number of traders, roughly, you know. And this is not because they like to burn cash. This is because this is necessary. You need to have a proper structure of risk management. You know, they're gonna study every scenario. They're gonna study the maximum loss you can do. It's called the VAR and stuff like this. And then they're gonna calibrate some limits that you cannot exceed. So the investment for retail investors, it would come to the initial investment that you can make, that you can have, the position you can bear. Before they stop you. You get stopped by your own bank before being stopped by the exchange, you know. So basically, it is very important to follow some rules to be successful in the long run. So you are not a professional investor, you are not a bank, but you need to follow some steps in your risk management in order to be successful. And I'm going to tell you what steps there are. So the number one rule in risk management is to define your time horizon type of trading. All right, so you can be a scalper, so it's like few hours. You can be a day trader, like you close your position before the end of the day. You can be a swing trader, weeks, month time horizon, or long-term investor, which is called position trading. So this is the first thing you need to know what kind of trading you want to do. Then you need to select your entry level, stop loss, and target properly, depending on what kind of trading you want to do. If you want to do long-term investment, this is fine. You can do without a stop loss. But if you do all the other kind of trading, which is like shorter term, you need to have a stop loss. Otherwise, you're going to get stopped by the exchange or by the broker, as Giuseppe has been. And once you have, so you need to select your entry level, stop loss, and target following a risk reward above 3. So once again, the risk reward is the money you want to make divided by the money you want to lose. So for example, if you have a risk reward equal to 3, it means that if you are right only 25% of the time, you are not losing money, which is very important, guys, not to lose money. And 25% of the time is not that complicated, all right? So once you have defined your entry level, stop loss, and targets, you need to decide about the kind of instruments you're going to use to make a strategy, to know the rules about those instruments, and to know the leverage, very important. And depending on the leverage, you need to choose very carefully your initial investment, all right? So this is the most important thing. Do not overinvest. You always need to keep at least, when you compute your levels, to make sure you're gonna have at least half of your capital on your account if things go wrong. The worst case scenario needs to be a scenario where you're only going to lose 50% of your capital. If Giuseppe has, if Giuseppe had followed this rule, he would have been rich today. Once again, instead of that, he lost everything. So guys, very important, do not overinvest. So I hope this story and all the set of rules that to me are very important to have a proper risk management are going to help you guys to make your trades properly. So if you enjoyed this video, please hit the like button and the subscribe button. And I'm gonna do very soon the golden rule number 2, which is to have discipline. All right, stay close to shore. See you guys.